Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, every week we get a new record high in the market, right? The last 13 weeks, right? We've had one down week, and it's like down maybe 1%. You can't get any drops. We keep going higher and higher and higher every week, up and away, right? It's very exciting. Oh my goodness, this isn't going to end well, but don't short the market yet. It's not time. This is going to continue to go higher until it's time, Then you got a problem. But there's good news. The system is still intact, right? The system's still intact. Okay, so here's how the system works, right? You print the money, you make the billionaires get very wealthy, and you make the poor people get very poor because prices are going to start to go up higher and higher. You see, as the billionaires get rich, the poor, well, they get poor. You see, there's a great divide going on. 10%, the top 10% own 90% of all the financial assets. Now, how much does the bottom 50% of the people own? The bottom 50%, they own 1% of the financial assets. Isn't this great? And this system's going to continue onward. As long as we keep pushing the liquidity into the marketplace, things will go higher and higher and higher. And we have a president, well, he ran on, what did he run on? He ran on the Doge thing, right? I mean, the Doge boys were going to come in, they were going to cut everything. You realize that this year is the third largest deficit we've had in the history of the United States, and that was only overtaken by the COVID years. But don't worry, the year's young. I think we can get to number one and have the biggest deficit ever. You see, the Doge boys, where'd they go? Well, we got rid of them. But hey, there's good news. There's good news on that too, right? Okay, so the Doge boys, Department of Government Efficiency, right? Well, we chase them out of town. We don't want the government to be efficient. But here's the thing. That was Elon leading that, right? Elon was leading that. Well, Elon, he had his own little coin out, right? The Dogecoin, right? I used to call it the doggy coin because it's dog with an E on it, right? Doggy coin. Well, the good news in that too, we got an ETF for the Dogecoin. I mean, this is incredible. More stuff to gamble on. I've heard a rumor. It's just a rumor. I cannot confirm this, but I believe there's an ETF coming out for Fartcoin. Fartcoin is going to have its own ETF. I mean, how many ETFs we have for Bitcoin? I think there's about 15, maybe 20 of them now. For Ethereum, about the same, 10, 15 of them. I mean, ETFs are the way, right? Because that's where the Wall Street, they can make money on you if they can get you into the ETFs, right? And so we're going to get one for Dogecoin. We got them for Bitcoin. We got them for Ethereum. We got them for, Dogecoin now. And soon, I predict Fartcoin. Fartcoin's going to have its own ETF. I mean, this is incredible. Okay, so we had the Fed come in, right? The Fed came in, and what did they do? Well, they cut the rates a quarter basis point. What did I tell you was going to happen to mortgage rates? They shot up. We cut them a quarter and they shot up over 50 basis points. Mortgages, right? Look at the TLT. That thing just is in free fall, right? I mean, it's just down. Okay, it's going to go lower. Now, I will get a little bounce here. I believe that. But as they cut the short end, the long end of the curve is going to go higher. And we discussed that. They're basically waving the white flag against inflation. 9% by the way they measure it. Back then, we were really at 20% inflation. But they said we peaked out at 9%, measured back the way the 1980s. We were at 20%, right? And we're going to blow that out of the water, right? I mean, the system is intact. I mean, if you just keep pumping the liquidity into the marketplace, we can get the stock market higher. Look at the Donald, right? The Donald. Okay, he's got the crypto family, right? You got Eric and Donald Jr. They have pocketed $5 billion in crypto just this year, right? The year's not even done yet. By the time that Donald gets out of office, they'll have pocketed a cool 50, maybe $100 billion, right? In the crypto market. And the crypto market needs one thing. What does it need? It needs liquidity. You got to keep pumping the money in. I keep telling you, as long as we keep printing the money, it has to go somewhere. And a lot of people think it's going into the stock market. It's really not going into it that much. Look, at stock market looks like it's going up every day, every week, 13 weeks, one down week, right? But here's the thing. The stock market's only up 12% on the year. The dollar alone has dropped 11% this year, and right now it looks like it's in free fall. So you're going to have a negative return if you compare the S&P with the dollar. You're going to end up down for the year. But that's not where the action is. Oh, no, no, no. Look at, I mean, it should be illegal to make this type of money. Now, I'm overweight in gold. I'm overweight in silver. I'm overweight in the miners. Gold up 40%, right? Silver up 40% for the year. Year's not done yet. Going to go higher, right? But the miners, most of my miners have doubled, tripled. The GDX, GDXJ are both up over 100%. This should be illegal to make this kind of money. If you have assets and you have real money, you are loving the Donald. Print that money, baby. Run those deficits. Let's get more deficits going. We can get this thing up higher and higher and higher. Now, you see, I do have a feeling that it's going to crash on the Donald's watch. I believe that. I don't think we have another 3 years left in the system. When it crashes, it's going to be epic. But you can tell just by the way the bonds are behaving. They cut interest rates and the bonds spiked up, right? I mean, the bond vigilantes, it's a real concept. There's really not bond vigilantes, but a lot of people believe if you cut that interest rate on the short end, inflation's going to spike, and that's going to spike the long end. So they're in there betting that the long end of the market, the interest rate goes higher and the long end bonds go lower. That's just how the take is. Right now, they can postpone the crash. And that's what they're doing right now. That's all they're doing. They're trying to postpone the crash. What did they do? They had to run the Doge boys out of town, right? They had to say, no, we're not cutting anything. We're printing, right? And this is how we're going to postpone that crash, right? I mean, we're going to postpone the crash in the real estate market in nominal terms. In gold, you're down 80%. Stock market, you're already down 70% in gold. Terms of real money, right? Is all they're doing is devaluing the dollar. Now, look, if people can't see this, I don't know if I can help them. I don't know if I can help anybody. You got to do you, and I got to do me. But people don't get it, right? They think their house is not going down. Look at the purchasing power of your dollar is getting killed, and your house is barely staying even in fiat terms, right? In nominal terms, it's barely hanging on. It's trying to hang on because they don't want that to drop, right? I mean, we're going to have that housing emergency being declared by the government. What's that mean? It means they're going to lower the short end back to 1%, like the Donald wants it down there, and probably go to 0%. And they would bring it to negative if they can. Once they get the CBDCs in there and they're bringing those in through the stable coin market, right? Then they'll be able to bring that money negative, right? Negative real interest rates are already there, but I'm talking negative nominal interest rates where they actually charge you to hold your money. You've got your money in the bank. They say, we'll only take 10% this year. You see, it's kind of like going to be the bail-in. That's what negative real rates are. It's a bank bail-in, and the banks are in incredible trouble. We talked about that in the other one. I mean, they can't make loans. They don't have any money. They lost the money in the bond market. They lost the money in the commercial market, and nobody's paying the banks anymore. I mean, there's delinquency rates on your student loans sky high, right? I mean, the delinquency rates on auto loans sky high. Delinquency rates on mortgages, FHA alone is 12%, which is really 25% if you count in the loan modifications. They modify the loan and then they say it's not delinquent. Well, you got a problem there. You got a big problem there, and that's a big problem for the banking system. The whole system's going to come tumbling down. And I want to talk about why this is. What went wrong? Where did we go wrong in the United States? Where did we go wrong? Well, I'm going to explain it to you in some easy to understand terms because a lot of people, they haven't grasped what's going on. They haven't grasped that devaluation of the dollar is all that's happening. Your house isn't staying up. It's not going up. It's coming down. It's coming down hard. But the devaluation of the dollar is what they're doing it with, so you don't see it. You're the frog in that boiling water, right? Turn it up a degree at a time. Frog doesn't notice. You're that frog, right? But I'm going to try to explain this to you. Now, okay, when I was a young lad, I was 12 years old. I remember it. 12 years old. I was young, right? But I was still tall. I was almost 6 feet tall at age 12. So people would hire me to do jobs, right? I was a painter and I liked painting. In my first job, I didn't think I could get any jobs. I was only 12 years old. But I had a little bit of guts back then. I'd go knock on the doors and ask if they needed anything painted, right? I didn't know if I could paint the whole house or anything. But this first job that I got was Mr. Ellis. I knocked on Mr. Ellis's door, said, Mr. Ellis, do you have any work I could do? I'm good at painting. He said, I absolutely do. Come over Saturday morning and we'll get you started. So anyways, he put a paintbrush in my hand and we started to paint the fence, right? 12 years old. And I loved every bit of that. He wanted me to break for lemonade. He made me some sandwiches, his wife did. And I didn't want to break because he was paying me. You know what he was paying me? He was paying me $3 an hour. $3 an hour. My friends were making $1.70. Minimum wage back then was $1.70. Most of my friends didn't have jobs. They weren't as tall as Mike, but he was paying me $3 an hour. Now that was cool, I thought, right? You see, look at what was the price of gold back then when I was making $3 an hour as a 12-year-old kid? Price of gold was $35, right? So it would take me less than 12 hours to get 1 ounce of gold. Now, I was not educated in the financial system back then, so I didn't know that that was really a good deal. But today, it would be like going and paying a 12-year-old kid. Well, let me think. It'd be like paying him $300 an hour to do the same, right? So $300 an hour today was like me making $3 an hour. So when I was working for $3 an hour, to me, that would be like getting paid $300 an hour today. Now, if you're a 12-year-old kid and you're making $300 an hour, you don't want to break for lunch because you think they might deduct that off your time. Eating that lunch for 20 minutes is going to cost you $100. You don't want to do that, right? But you see, things have changed since then. $35 for an ounce of gold then, $3,500, well, actually it's closer to $3,800, but $3,800 for the same exact ounce of gold. Gold did not change, right? It's 1 ounce. It's 1 ounce. What changed? Well, the dollar lost 99% of its purchasing power. All right, so do 12-year-old kids that start to work at McDonald's? McDonald's hires them at 14 now. I don't know if you realize that, but you can get a job at McDonald's for 14, right? Okay, should they pay that 14-year-old $300 an hour? Well, my argument would be yes, in this fiat system they should, right? Or have them work 12 hours and give them a gold coin, because that's how the world was back then. Back then we had one person working in the family, and the family could have 2 new cars in the driveway, own a house in the nicest neighborhood, and the mom stayed home, raised the kids. I talked about that last video. Our kids are getting raised by strangers today. Why? Because the Federal Reserve has destroyed our country. They have stolen from us. They should all be locked up. They are criminals. They have enslaved the whole country to work for them, right? That's what's happening right now. You see, that $3 that I made back then was like making $300 today. What does a kid that works at McDonald's make? I don't know, 17 bucks an hour? Maybe. It ain't $300 an hour, right? But that's what I was making as a 12-year-old. Shouldn't the 14-year-old make more? Absolutely should. But this is how we've lost our country. A lot of people don't understand that everything in our country is tied to the fabric of the financial system, and there's only one criminal organization out there that's destroyed it, and that's the Federal Reserve, and it's time for them to go. Now, I do believe in my lifetime I'm going to see the Federal Reserve go bye-bye, and I'm not just talking about Donald firing all of them. He wants to file Jerome, wants to fire Lisa Cook. He wants to fire anyone that doesn't want to lower rates rates back to 1%. Well, Donald, you may be on the wrong track there, but once again, he's not looking out for you. He's not looking out for me. He's looking out for his rich friends, looking out for his family that have already pocketed $5 billion just since he's been in office. I mean, this is insanity in my opinion. Never seen this in the history of the world. We are a banana republic. We are the biggest banana republic we got right now. I mean, it just keeps continuing on and on and on. I mean, you can't make this stuff up. You can put the tariffs on there, right? And that's how we're going to bring in the money, right? We're going to bring that in because we don't pay the tariffs. All those foreign countries pay the tariffs. Well, you know what? Jerome Powell in his testimony, when the Fed lowered interest rates, he said there's no evidence that the foreign countries are paying 1 cent of the tariffs. He says the burden is on the businesses that import them and the final consumer. Now, the business may be consuming some of that right now, but they're not going to continue to consume that. They're just not, right? They're going to pass it on to the consumer. You're going to see the prices go high. You're going to see the interest rates go down. You're going to see the long term shoot up. You're going to see your mortgages shoot up. And right now it's interesting. You got these boomers. They put the house on the market. Oh, nobody offered me what Billy Bob got. I'm going to take it off the market. Look, they're doing the wrong thing. They should be getting out as fast as they can because this thing is going to blow on the Donald's watch. I don't think we have 3 years left. Maybe we do. Maybe we don't. I say we don't. He's going to print all the money. Try to kick the can down the road. Try to get his family to take 50 billion, 100 billion off the table so, well, they can live in life for generations and generations. We'll see it how it plays out. If you like this stuff, give me the thumbs up. Punch the subscribe button. I'm Tall Mike. Get out there, everybody. Enjoy the day. Bye-bye now.